Hey, the stock market made some pretty good gains this week, and that will have many wondering if this is the start of an improvement in the market or is it just a sucker rally? Well, that question's not that hard to answer if you know what to look for. And in this week's video, I'm going to walk you through the analysis. We'll look at stocks, commodities, even cryptocurrency to get a sense of where they're likely to go in the short term and also in the long term. And as we go through the charts, you will see that there's a common theme that comes up over and over again. And if you can understand a very simple concept, you can get good at predicting trend reversals. And of course, if you can predict trend reversals, then you can do quite well in the market. So let's start off with the chart of the S&P 500 ETF, SPY. And as we go through these charts, I'm going to start with the short-term time frame, which is important for those worried about where the market is going to go in the next few days or perhaps weeks. And then we'll switch to the longer term time frame to get that bigger picture view for the investors who are more concerned about where markets are headed in the months ahead. All right, so again on screen right now, S&P 500 ETF, SPY. Let's draw some lines so you can start to understand this very simple but important concept. All right, so what I've done is I've drawn some downward trend lines. These downward trend lines cut across the peaks. Okay, they start at a high point and they cut across peaks. Anytime you break a downward trend line, you have a bullish signal, but it is more meaningful if there is a rising bottom. So you can see here, this low is lower than this low, and that means that the buyers are in control. And as long as that line is in place, the buyers are in control. So we had another break here, but then the sellers took control here with a break of this upward trend line. Now that only lasted 1, 2, 3, 4 days, because Wednesday of this week, we again broke a downward trend line from a rising bottom. And so that's what started the strength that we saw Wednesday, Thursday, and Friday. Now we can then take that same concept and apply it to the longer term time frame. So to do that, I'm on the Stockscores.com website. Charts are all free here. I punch in 3-year weekly chart. So I just click on 3-year and it makes it a weekly. So let's apply that same concept. Oops. We go starting at the highs. There's your downward trend line. We broke that in January from a rising bottom. And we've actually maintained the rising bottoms just barely. And so the buyers are actually still in control on the longer term time frame. That means the market is more likely to go higher than lower in the months ahead. Now on the short term time frame, that very short term time frame that we were looking at first, it's also the case that the buyers are in control, but they've been pushing the market up quite strong over the last few days. And so I think there's a good chance in the short term that we're going to get a pullback. And there's a reason why when you look at this chart, the long-term time frame. If I draw a line across the last peak, that is resistance. And so what you're doing is building a pattern here called an ascending triangle. And so typically when you get up to that peak, which was touched back in January, you're going to get stuck and we'll probably see a pullback. So the long-term outlook is definitely improving. We broke the downward trend line. We're building rising bottoms. The short-term time frame was strong this past week, but now we're getting up towards resistance. And so don't be surprised if early next week we get stuck, the buyers get stuck, and you see a little bit of profit taking. Now the next chart I want to look at is IWM. And the reason I like to look at this is it is a good representation of what retail traders are doing. Because the IWM represents small cap stocks, so generally cheaper stocks, smaller companies. And those are the companies that the retail trader prefers to trade because they get more bang for their buck. These stocks can make bigger percentage moves, so you don't have to put out as much capital. And if you're trading with, $10,000, $5,000, $20,000, relatively small amounts of capital, you can get more bang out of those small stocks. So when we look at the IWM, we'll punch this in here, you're looking at an indication of what retail traders are doing. And you can see that since the middle of March, it's been sideways. And from February into the start of March, the market was heading lower. So it has been a challenging time for the retail trader. Now, a lot of that was the problems in the banking sector, because a lot of those small banks are listed on the Russell 2000 index. But it's also just the collapse of the market because of the banking sector hurt confidence, and a lot of retail traders got beat up a little bit, and so they were sitting on their hands not willing to do anything. But what's happened this past week is we've started to break through resistance from rising bottoms on the short-term chart. We did that on Friday. And we've been building rising bottoms for 5 or 6 days. Now, if you were day trading or swing trading the stock market last week, you will know that things were better. They were by no means great, but they were definitely better than we've seen in a few months. And that's a positive sign. Now, again, we want to get a sense of the long-term picture. So let's take a look at that 3-year chart. And there you can see that the small cap stocks aren't in quite a good pattern as the large cap. Yes, we broke the downward trend line like the S&P did, but we did it much sooner. We did that last summer. And since then, we've just been oscillating in this sideways range. Now we're at the bottom of this channel, and so it's likely that small caps are going to move back up here. So I think what has happened this week is a little bit of confidence has come back to that small retail trader, and it's going to start to bring out some of the action in those lower price stocks. Things like the biotech sector, some of the crypto miners have been doing well for the last couple of weeks. We'll talk about crypto in a moment as well. Okay, what about the Canadian market? Canadian market very dominated by commodities, so gold and silver and oil and gas. And you can see the Canadian market managed to break out on Wednesday, much like the S&P 500 did, and it is in the short-term control of the buyers. So short-term, we would say this is a bullish chart. But what about the big picture, the 3-year weekly? Well, much like the Russell 2000, it's stuck in this sideways range, and it's been in there for almost a year, since July of last year. It has some room to go up until it gets to resistance, and I think that's likely to happen. But it's not a great looking chart. I would say this is a neutral chart. The S&P 500 long term is a bit better. I would say bullish chart. And in the short term, we have bullishness as well. But on the Russell and the TSX, I would call it neutral in the long term. Well, let's jump into some of the commodities. Very important, of course. Things like gold to the Canadian market. And you can see that gold was doing really well, but the cycle of rising bottoms was broken there. And we made one more stab at highs, but ultimately we're in what's called a pennant pattern. Okay, and a pennant pattern has compressing volatility. So there's uncertainty here, and with each wave up and down, the volatility compresses, and that means investors are coming to some consensus. They agree, the buyers and sellers agree on what these stocks are worth. And so the volatility is compressing on gold, and what we now need to watch for is, does it break out or does it break down from that pennant pattern? Because the direction of the trend into the pennant is up, it's more likely that it will break higher. However, until it happens, I would say this is a neutral chart in the short term. Now let's look at the 3-year weekly, and you see why the gold market got stuck. Because it has risen to the past price peak, which is resistance. When markets rally into resistance, they usually get stuck at resistance. It's a very simple rule that everyone should write on a note beside their computers when they're looking at the market. When price rallies into resistance, it almost always gets stuck at resistance. And we're seeing that the last 3 weeks. We've been stalling beneath that high. Now, if we were to break through out of it, we'd still have this resistance to deal with. And so although the momentum in the gold market in the longer term is up, I don't think that the reward potential is enough to compensate you for the risk of entry here. So if you are in gold stocks or silver stocks, it's okay to hold them, but I wouldn't be initiating positions here because the market has already gone up for 6 months, and it's at some resistance. There's not a lot of upside. So it's a hold, favorably, good bullish chart still, but not one to initiate positions. How about oil? Well, a couple weeks ago, I talked about how oil was breaking down through an upward trend line, and yet oil has actually done well in the last 2 weeks. You have rising bottoms on the chart. So that is bullish. There was the downward trend line, broke the downward trend line, and then broke another one from a rising bottom. So in the short term, that made this bullish. But let's look at the long-term picture, because it's quite different there. On the long-term picture, you have an upward trend line that was broken here from falling tops. So that was the negative signal that I showed you 2 weeks ago. It hasn't had follow through the downside, but the chart hasn't repaired itself yet. And until it repairs itself by breaking this downward trend line from a rising bottom, we shouldn't get too optimistic about oil. So at this point, I think the strength that we've seen this past week in oil could just be a sucker rally. And so I want you to still be cautious with energy stocks, because we still need to break this downward trend line from a rising bottom. All right. Now, what about currency? Let's take a look at the US dollar. Who's in control? That's what I always ask myself when I look at a chart. Who's in control? Are the buyers in control, or are the sellers in control? How do you answer that question? Well, if there's falling tops, the sellers are in control. And so this is a bearish chart in the short term for the US dollar. But on the 3-year weekly time frame, you can see that we have this upward trend line here, which is just being danced along. Now, if we were to break down through this from a falling top, that would be bearish for the US dollar. And it's very close to happening. Hasn't happened yet. We could see it bounce off of this and go back up. And a lot of that will depend upon interest rates. So let's take a look at that chart. TBT is the chart I use to represent interest rates. And I want to make it clear, this is not an interest rate chart, but it represents interest rates. And what has happened with interest rates over the last month? Generally down. And on Friday, pretty good move to the downside. Now, it's not really a bearish chart because you're stuck in a sideways pattern. There are no falling tops, there are no rising bottoms. So it's not clear what direction this is going to go. It's really just going sideways. And until it breaks out of the pennant, up or down, we have a difficult call. Notice the sentiment stock score is 42. That's basically neutral. And that's what I would say the chart is showing us in the short term. But let's take a look at that long-term picture as well. The 3-year weekly chart. Upward trend line here for interest rates. And that was broken recently from a falling top. So it actually looks like interest rates are more likely to go lower than higher in the months ahead. Maybe not in the days or weeks ahead. It's hard to predict because we're stuck in that sideways range. But that's sort of how this looks. All right, now the last chart I want to look at before I show you the day trade of the day, an example of a day trade from the past week that did quite well, is I want to look at the chart of GBTC, which is a Bitcoin investment trust. Basically, it's an ETF backed by Bitcoin. And here you can see that the buyers were in control. It was broken on the 22nd of March, but not from a falling top. Then you had a breakdown from a falling top here, but we haven't seen the follow through to the downside. Oftentimes when upward trends are broken, it doesn't mean that it's necessarily going to go lower. Sometimes you just end up going in a sideways range. And that's sort of what's happening for Bitcoin. It's relatively stable and it's starting to build a little bit of a rising bottom again. And in the market last week, there was some action in some of those crypto miners like MARA, HUT, RIOT. They were pretty good traders to the upside in the latter part of the week. Why? Because Bitcoin has been improving and starting to build rising bottoms. But let's look at that 3-year picture to get the longer term time frame. And here you can see that the control has changed. The sellers were in control since late in 2021. And if you watch these videos every week, you will know that I've been bearish on Bitcoin for a very long time and only recently became bullish because we broke higher from a rising bottom. See the theme that I keep repeating over and over again? It's not really that complicated. I'll do this for you every week. I'll do this analysis for you every week. That's why you subscribe to the channel and turn on the notifications bell so that when these videos get uploaded, you'll hear about it. It's free analysis. Why not? But the thing about Bitcoin is it is turning momentum. It is starting to move higher, and I think it looks more likely to go higher than lower in the weeks and months ahead. But in the very short term, we're stuck in that sideways range. All right, so that's a rundown of the markets. Now, many of you may have an interest in learning more about what I do. I'm doing a number of in-depth talks that are all free this week, starting Saturday and then Monday or Tuesday, Wednesday, Thursday. They're all free. If you want to participate in any of those for a deeper dive into how to read charts, go to stockscores.com, go to Trader Training, upcoming events, and they're all listed there. If you have an interest in being a better investor or you're more interested in day trading, there's some presentations there that you can join in on. And again, it's all free. All right, so let's take a look at the day trade of the week. And this is on BBAI. And there's lots of good trades this past week. Nothing earth-shattering because the market's still just starting to gather momentum to the upside. But this is one that was pretty good. What I want you to notice on this chart, this is the 30-minute chart. Notice how the volume was a lot higher on Friday. That tells us that there was something going on in this stock. Now you can also see on this 30-minute chart that the stock was breaking out of an ascending triangle. Many of you that analyze charts, you know that that's a pretty good pattern. Now that's the longer term chart. What I do when I'm day trading is watch the 1-minute chart. So I'm going to go to the 1-day, 1-minute chart. And it's the same concept. I'm looking for a trend reversal pattern. There's the downward trend. There's the build of a rising bottom. And there's the break. And you can see the stock went up from 220 to 250. It's not bad, a little better than 10%. But that's in the course of 2 hours. And so that's the kind of thing that we do on Active Live on Stockscores.com every day. You can learn more about that by going to the website. But of course, if you participate in any of those webinars next week, I'll teach you a lot more about how to do this stuff. So hopefully you'll join me for some of those. Hope that you've enjoyed this week's video. Pardon my voice, I'm fighting a little bit of a cold. But I'll see you next week again. Make sure you're subscribed to the channel so you get those alerts. And as always, trade well.